Yeah. How's it going?
Good. How are you, gentlemen?
Doing good. Thanks for having us.
Yeah, thanks for being on the show today. We appreciate it. Sorry for the slow start to our viewers that are on. My name is James Mercado. I'm the president of ProVisor. This is a segment we do on a monthly basis called Ask ProVisor. The reason we do this is we want our real estate agents who are in the field, who maybe have questions about things, to be educated and empowered so they can make decisions on the spot that are beneficial and bring value to their clients. So what we do on a monthly basis is we bring different professionals in who are considered to be experts in their field and ask them questions, practical questions. I'm a simple guy, so I like practical type things to talk about. So today we have Jim Bremberger and Brad Zacharias. And guys, introduce yourself, tell us what you do, and share some information.
Yeah. So I'm Jim Bremberger. I've been in the insurance industry for about 20 years. Just actually right out of college. Spent some time with more captive agents, exclusive agents. Was with State Farm for quite a few years. We have about 5 Allstate agencies. We actually worked with Brad at the Allstate agencies. And then about 4 years ago now, we went independent. So, so I've been doing that ever since. Independent agent means that we can shop around to numerous carriers versus your captive agents, like State Farm, Allstate, Farmers, American Family. And essentially, we can just offer clients wide options and try to shop around to get the best prices as well as the best coverages.
Okay, I like that.
Yeah, and I'm Brad Zacharias. Actually met Jim through Allstate. Before I came into insurance, I was a teacher for 15 years. And so I kind of take a lot of those skills that you need for teaching, trying to educate the client, what their coverage is, what it means. And again, met Jim through Allstate probably 6-7 years ago, and then obviously moved over to the independent side of things with him as well, and been doing it ever since.
Great. Right out of the gate, before we get started, I just got to say this. So you guys were captive, and what was the disadvantage of being a captive agent versus your model now?
So essentially, being captive, you only represent one company. So if you're a State Farm agent, you can only offer or sell State Farm products. So I mean, there's a lot. The disadvantages with that is we all know insurance changes year after year, as far as there can be price changes, coverage changes. As I'm sure we're going to discuss today, there's underwriting guidelines that change. And when you're a captive agent, you don't have the availability to go outside of that company. So you either, if one client is going through rate increases, really what you can only do to help combat those rate increases is look at either adjusting that client's coverages, like essentially reducing their coverages, or increasing their deductibles. Essentially, you're going to change the coverage that they have right now to combat that rate increase. Now, versus being independent, we represent, I guess, a pool of carriers, or pool of companies, where we can shop around individually to kind of tailor a policy to that, client's unique needs. Give them coverages that are particular to their home or to their auto. So it just, again, it's at the end of the day, giving the client more options and availability to shop around every year versus being your captive agent. You don't have that availability.
That's interesting because we share a similar business model. So ProVisor is an independent mortgage banker. We have the diversity and options that a mortgage broker has, but we have the strength because we're powered on a banking platform. So if somebody comes to us and they don't fit into the mold of one of our servicers, we can take that client and put them somewhere else. So that's what you can do. If they don't fit into this bucket for travelers, and auto owners said, oh yeah, we do those kind of loans, those kind of insurance policy, then you can take them from there and put them into it with a different company and write the policy that way. Is that correct?
Exactly. Yep.
Okay. Very similar to what we do, because, versus like, a captive lender would be like, your credit union or BMO or Chase or Fairway or Guild. Some of the bigger mortgage companies are captive, like a State Farm or an Allstate. We're independent like you, so we can shop around and try to find the best deal for the consumer. So we share a philosophy like that. So I'm glad to hear this, actually. I'm very happy because this is what's best for the consumer. Because you go to work for your client and you place them where they need to be. And just because one company may not like them or give them a high rating, you can then take them to another company and get them a better deal. Would that be correct?
Absolutely. And it solidifies that relationship going forward. You always want to be there. Just like I said, I mean, things can always change. People get new drivers, they purchase new homes, they go through refinances. There's all these variables that change. You want to be able to, at the end of the day, offer them, the best.
Okay, that's good stuff.
Super
That brings a huge value for your guys' business. And what's the name of your insurance agency?
It's a Joseph Hale Insurance Agency.
Okay. Hoell?
Yeah, so it sounds like Hale, but it's Hoel, Hoell is how it's spelled.
Okay,
but
great. We'll talk more about that for sure. Great.
Yeah.
So I got a couple questions, all right? So we have some questions that came in from some of our real estate professionals, a couple of loan officers, and so I want to just kind of jump in there. And one of the questions that came in was, are the rules for the home insurance the same for every insurance company, or do the rules kind of vary by company that you represent?
Yes.
I mean, like if someone says no, you know that you could probably, not everyone will say yes, but there might be an option to say yes. Specifically, let's talk about wood burning stoves.
Yeah, so I mean that's actually a really common thing that homeowners go through, and yes, the rules are different for every carrier. Every carrier, whether they're a captive or an independent company, they're all going to have different underwriting guidelines and different rules and rates. And so again, one of the advantages of having an independent agent is to be able to, like Jim said, tailor that coverage to that specific customer's needs and really find the company that is going to be the best fit for them. Specifically for wood burning stoves, a lot of companies get kind of leery of that risk when they are in a detached structure. Sometimes if they're in the home itself, like maybe in the basement, if it's an older home, they just want to make sure that it's been properly inspected and properly maintained so that there's less of a risk of something happening. A really common thing that happens with those wood burning stoves is people don't maintain them, and then stuff gets built up in there, and then once they do use it, it could cause a fire.
Is that similar to these new, wood pellet stoves that are growing in popularity? Is it a similar concept?
Yes. Yep.
Okay. All right. That makes sense then. So every company that you represent has got a different appetite for risk on different topics. Some have problems with swimming pools, some are going to have problems with stoves. But if they go to a captive agent, like a State Farm or American Family, it is what it is. Like you don't fit in our square, circle, or triangle, you're out of luck. But you can say, hey, there are companies that they love swimming pools. There are companies that hate swimming pools, but we work with all of them, and we'll put you in the right place.
Absolutely.
Yep. And some carriers, so their particular underwriting guidelines. So there's some carriers that go by town class, specifically where the home is located and like relative to where a fire department is. So if it's beyond a certain mileage from a fire department, that town class may be, like, for example, a town class 8. So that's higher on their scale, meaning that by the time if there was a fire at that home, by the time it could be reported to the time that a fire truck could get there could be longer. So there's going to be more of a rating behind that versus a lower town class, like a town class 1, where there's a fire department right down the road. If there is a loss or there's a fire, the chances of that fire causing extreme damage or creating a total loss is maybe smaller than in a higher town class. So some carriers, if that wood burning stove is for that particular risk in a higher town class, they may just say, well, that's ineligible. We can't insure that property because it's so far from the fire station versus some other carriers who might not, adhere to that particular guideline, if that makes sense.
It's all about mitigating risk, isn't it?
Correct, 100%.
Okay. All right. So homeowners insurance for people who maybe aren't as sophisticated in this space as you guys are. What happens, let's say, in a fire or whatever, or a partial loss to my personal belongings, like my clothes, my couch, you know, my brand new TV that I just got at Costco. What happens if there's damage to that? Does HOI cover that or not really?
Yep, it does, 100%. So the typical homeowner's policy, you have your dwelling coverage, which is covering the structure. So that's, you know, your floor walls, your home. And then you have your personal property coverage, which covers all of your belongings inside of the home. So I always kind of use the analogy, pretend that you take the roof off your house, you tip your house upside down, anything that falls out is considered your personal property. Your
That's
furniture,
a great analogy. I've never heard that before. That's really good, actually, Jim.
Yep. So like your personal property, your furniture, your dishes, your bed. I mean, all that stuff, all your belongings inside your home is covered underneath your personal property. And typically, most carriers, they'll do how they determine that amount. It's based off of percentage of your dwelling coverage. So they usually do either 50% of your dwelling coverage, or they do 75% of your dwelling coverage.
Okay.
So let's just say that, just for the easy numbers, your home is insured for $100,000. Automatically, depending on the carrier, if they do 50%, then you have $50,000 of personal property coverage. If they do 75,000, then you have 75,000 of personal property.
Does that include the garage? Like if I bought a brand new mountain bike or a new Harley and it's in the garage, does that get covered, or does the motorcycle get covered under the auto? And would the bike be covered? Not at all. The pedal bike or my lawnmower?
Yeah, it's actually a little bit tricky with that. So a regular bike, and now, you know, with the emergence of e-bikes, those are also covered a little bit differently. But a motorcycle would be covered under a separate motorcycle policy. Some companies do allow them to be connected to an auto policy, but it's very rare nowadays. But your regular bike would be considered personal property. The motorcycle would have its own policy, and that would be covered under comprehensive.
But things in your garage, your lawnmower, your tools, you know, stuff inside your garage, because that's attached to your dwelling, that's considered your personal property.
And if it's a detached garage, how does that work? It's a rider?
Yep, it still would be your personal property. The main difference is if it's like motorized and it can be used on public roads, then essentially it would have to be under like an auto insurance policy or a motorcycle policy. But anything that's like that you use at your primary residence would be just covered on personal property.
All right, so just advice, and we know that you're not the underwriter. You are the face of the companies you represent and the liaison between the consumer and the actual insurer. But my question is, like, is there things like maybe you shouldn't file a claim on this? I mean, like, hey, you know, like my dog dish got broken because my kid ran over it with a bike and I want to file a claim. No, I'm being silly, but is there things that, like, you know, that's really not wise? Or
yeah, that's actually a very common occurrence in the industry. You know, sometimes people think anytime they get a little ding in their car, they have to file a claim. Anytime they put their shovel through the siding of their house by accident, they have to file a claim. What you always want to look at first is what their deductible is. And then what we usually do is we advise the customer to first get an estimate before ever calling the company. And then as an agent, you know, that's kind of where we come in and say, okay, the damage is X amount, your deductible is this. Yes, that is something you want to file a claim for, or no, it is not something, because, you know, especially on a homeowner's insurance policy, your standard deductible is $1,000, and you don't want to file a claim for $1,200 worth of damage, although a lot of people think that they just automatically need to. And the reason you don't is your rates are going to see a pretty hefty increase with any type of claim, whether it's for $1,000 or $10,000, or if it's a total loss. So we really want to, you know, you really want to discourage people from filing really small claims that are very close to the deductible, because in the end, they're going to be paying more for their insurance than it would have cost to just pay out of pocket.
A question just came in live here and just said that they want to know if the deductible needs to be paid up front on a claim.
It does not. So how it works in an insurance claim, from, let's just use an example of a hailstorm comes through and you need to get your roof replaced. And to replace the roof is $20,000. So if your deductible is $1,000, you have contractor XYZ come out, fix your roof. What the you don't pay your deductible up front. What happens is that at the end, when the work is completed, the insurance company is going to pay the contractor $19,000, and then it's on your responsibility as the homeowner at that point to pay your deductible.
That makes
So, yeah,
sense. Okay.
you don't pay your deductible up front. It just essentially you pay it at the end when the claim is paid by the insurance carrier.
Let me throw you a curveball once, okay, guys? I know you're smart and you're pros, but so I'm a realtor and I'm showing this house, all right? And my client loves the house, but the house had history because it did have the garage, the attached garage started on fire and it caused fire damage into the kitchen. Okay, all it's been done. The insurance company did a great job. It's back to normal. But somehow someone knows about this. Is that going to affect my new buyer's rates on that house?
So technically, yes, but not as much as it would affect it if they actually filed the claim themselves. And the reason for that is the insurance company, they're not trying to personalize and they're not really knowing you as a person or as an individual. It's really a large, group of numbers that they are looking at. And so any property with prior damage is technically more risky for the insurance company to assume that risk. So they want to make sure that the damage has been fixed, mitigated properly. But they also know now that while there is a propensity or a higher rate for possibly another claim that they are going to have to pay out on, so they want to make sure that it's fixed. Now, again, you're not going to get surcharged for it quite as high as you would if you were to file a claim yourself, but there is a slight upcharge for it.
All right, guys, so this question just came in while you're talking. It says, how would the new insurance company even know there was a claim? Because let's just say State Farm paid that claim and now they're working with you and you're representing travelers. How would travelers know that State Farm fixed this house?
Yep, so that's a really good question, and that's also a very common question that people ask. Every insurance company.
They asked that question to be anonymous, just for the record, okay? So I'm here to protect the innocent.
Yeah, every insurance company subscribes to a national database called CLUE, which stands for Comprehensive Loss Underwriting Exchange. And what that is a report of all of your loss history, your insurance history, and the property too. Yeah, and at the property as well. And the reason companies have that is they want to know what the risk is that they're insuring. And so if somebody's been in 4 accidents, it doesn't matter what company they're with, and then they move to a new company, the insurance company wants to know, hey, what kind of risk are we getting involved with here?
Wait a second here. You're telling me and all of our viewers that there's so we work with credit reports. So I pull a credit report and I can see if you were a deadbeat on your student loans. I can see if you didn't pay, you got a repo, you filed a bankruptcy, you didn't pay your Sears credit card back in the day. I see all that data. You're telling me you guys have something similar but different for claims?
Correct. Yeah. It's the report that every single insurance carrier uses, and it's I don't know about all carriers, but most carriers throughout the United States subscribe to this.
Okay.
And when any agent runs a loss history report, it'll show has this individual filed claims before at their previous address, on their auto insurance. It'll show claims that have been reported at the address that they're purchasing. So
interesting.
They can see if there's been losses at that home. So
got it.
It's kind of like how you run a credit report, but I mean, not as much, but essentially it's
very similar.
Very similar.
Okay. That's good information to know for those who maybe thought that they could, maybe they lived in Phoenix and they had a claim and they came to walk, said, no, I haven't had a claim.
Very
common
when someone calls for a quote and they'll say, no, I haven't had an accident in years. And then you run that report and you find out, actually, you've had 3 in the last, 6 months. It's like, well, that's why your rate's, where it is.
And it'll also show up too. Then there's a good thing to point out if people are renting. You guys we've had numerous people that call say, hey, we're renting, but we're purchasing a home now. And then we ask if they've had any claims, and they're thinking, well, I'm a first-time home buyer. I've never filed a claim. But even if they filed a claim on their renter's insurance, that'll still show up on that report. And essentially that it's a filed claim. So unfortunately, it's gonna have some rating impacts even on their home insurance policy that they're purchasing.
And another real quick, I just want to kind of
Yeah.
add to that too, back to that with the clue report and do you want to file a claim or not? That's another good reason why we encourage the client to get an estimate first, and then we determine, because if they call the company and even if the company denies the claim, that is still going to show up on your loss history as a $0 claim, and it could still
Really?
affect the
I
rate
didn't
going
know that.
forward.
Repeat that again, because I didn't, I mean, I've been doing this a long time and I actually didn't know this. I'm going to have you repeat it
Yeah,
again at a
so
fifth grade
if-
level, because I'm not that smart. So,
Yeah, again, if there's a potential for a claim, we always encourage the client to get an estimate first before calling the company to file the claim, because in the event that it is a really close dollar amount, or the company, for some reason denies the claim, either there isn't coverage that they thought they had, or whatever, even if it's a $0 payout and a claims adjuster was assigned to that, it is still going to show up on your loss history as a $0
Wow.
claim. And while it is not surcharged as heavily, you still get dinged for claim frequency. We had a guy just a couple of weeks ago who I think within the last 2 years, he had 4 $0 claims, and a couple of our companies said, yeah, sorry, we don't want to accept this risk because there's a chance, a really high chance, that this guy's going to want to file a claim. So
I did
again,
not
why it's
know
very
that.
important to just talk to your agent and get that straight before you actually call the company.
And make sure that they don't just proceed right away with filing a claim, because once the claim is filed, they can't physically remove that from your record. It's going to show up on there as a $0 paid claim, but it'll still show up on your clue report, your loss history report, that you filed the claim.
2 questions, follow-up question to this. If I call you, Jim, or I call you, Brad, does that show up, or can I just call you and talk?
No,
Nope.
yeah, no, that's what we're here for. You definitely
Okay.
call and have the conversation, talk it through.
Okay.
Yeah.
So the bottom line is we need to call Jim, or we need to call Brad. Don't call the parent company.
Absolutely, 100%.
Okay. All right, that makes sense to me. So it's kind of like for our real estate agents out there who are maybe more savvy in that, and on our side of the business, that's kind of like when a customer applies for a loan, they get a ding on their credit, and they say, well, I didn't take out the loan, it doesn't matter. Well, it still hurt their credit score, because even though they applied, they didn't follow through, their score does take a hit. That's the clue report, basically.
Correct.
Yep.
Okay.
That's a good comparison.
All right, got it. Okay, got a question for you. So now I'm super excited. I worked with Brad, and he got me this great deal on my homeowner's insurance. And we're in our house, and we saw all these projects we wanted to make. So we remodeled the house. Our real estate agent gave us some tips. So we remodeled it. We got some new materials. So we did everything. Now I'm done. Do I need to call Brad and say, hey, Brad, by the way, this is what we just did, or does that not really matter?
100% it matters. You definitely want to call your agent and get that updated. So when you purchase a home, say it's built in, let's just use an example, built in 1990, it's builder grade, just kind of regular countertops, regular linoleum flooring. Now you want to update everything. You want to get stainless steel appliances, granite countertops now, tile on the floor. Essentially what that does is it takes like a regular builder's grade home to a more of a custom home. Now that's going to affect your overall cost of, the replacement value of your home, your coverage A. Before it might have been insured, let's just say 150,000. Now you put all these updates in, or you finished your basement. Now your home, the replacement cost technically has probably gone up. So you want to let your agent know, because in the event, heaven forbid, you have a total loss on your home, there's a fire, a kitchen fire, or your basement floods. You could run into a situation where you're really undercovered, or you may not even have coverage. We see it a lot with people finishing their basement. They took out a home policy, their basement was not finished. They didn't want to have any type of water backup coverage, or things of that nature. But now they finished their basement, they have carpet down there, drywall, and now their basement floods. Well, now if they have that loss, they call their agent thinking that's covered. Well, now you you may not have that coverage because you haven't had the water backup coverage, or there might just be some discrepancies in coverage. So it's definitely, anytime you do any type of improvements, updates, you definitely want to call your agent and walk through that and have them properly advise of what areas you should increase.
Okay, that's good to know. If I decide to put a little rec room downstairs for my kids, then I need to call you and let you know, because I might not have that water backup, and I just might assume my house is covered because I got house insurance, homeowners insurance, but it doesn't have the water backup. So now I'm not going to be covered, and I'm going to be stuck losing all the money that I just put into my basement, right?
Yep.
Yeah. Got a question for you. So we're seeing a little bit increase in frequency with questions about the age of roofs and mechanicals. So when we come to you, when a client comes to you and you ask those questions and they don't know, what do you do? To say, well, 20 years old, or how does that work? Like, if we don't know, how do we answer that question truthfully so we don't end up on the naughty clue report for doing something we weren't supposed to do?
So this has changed quite a bit recently.
Okay.
I mean, before I can kind of get into that because there's been a lot of changes with roofs just in general. But to answer your direct question is we want to kind of get the best answer guess that we can in that situation. So we ask the realtors or the buyers of the home that maybe ask the seller, like, hey, when was this roof updated? Did you put any newer shingles on? If you don't know the direct answer, we kind of want to at least get the best guess.
Okay.
You can look at a roof and say, hey, it's been done within 10 or 15 years, or, well, no, there's a lot of granule loss. It looks, pretty worn down. It's probably on its last legs. It's probably over 20 years old.
Okay.
So to answer that question, there's not a very direct answer, but we definitely want to get the closest guess that we can get in that point.
Yeah, and sometimes too, with that clue report, if someone's purchasing a new home and they say, oh, I don't know, the guy said, oh, the roof was done a couple of years ago when there was a big hailstorm. They had to get a new roof. Well, when we run the clue report, if there's a claim from, let's say, 2022 on their home, well, then we know it's probably a 2022 roof.
Okay, that would help. I have a question. Pipes. We've seen, like, what does that matter? The pipes that are in the house. Like, we're seeing questions like, what kind of pipes do you got?
So a lot of carriers, they won't take anything that's galvanized. So like anything that's like older, I think prior 1950s and stuff like that.
And I think the main reason for that is, again, there's a risk of something catastrophic happening.
Bursting pipes.
Yeah, bursting pipes, whether it's freezing pipes, or even like a slow leak that, if you have a 2-story house, causes damage in between the walls or, in the floorboard. And then, it builds up over time. And then before you know it, you need to rip the entire floor out and redo everything. So Again, the insurance company wants to make sure that the risk that they are insuring is a viable risk, and not just a 200-year-old home with 200-year-old pipes and furnaces and that kind of thing.
So some carriers automatically, if they have galvanized piping, it's ineligible. Most carriers, I mean, we have carriers that will take galvanized piping, but they want to see either PVC or flex piping and things like that.
Okay, so what if I don't know and you ask me the question and I go, copper, and it's not copper, it's galvanized, and we come back and there's a problem, like, well, dude, I didn't know, I just guessed.
So anytime that we insure a property, through the carrier sends out a third-party inspector.
Okay.
They don't go inside the house necessarily. If it was built prior to a certain year, then they require an interior inspection. But every time they'll do an exterior inspection. So at that point, if something comes up like, hey, well, the roof is in terrible condition, or if they can see something, I don't know, through a window that shows piping and it shows galvanized at that point, they'll always give usually 30 to 45 days saying, hey, this needs to be fixed, or maybe they'll wait till the policy renews, give the insured time to get, whatever they deem ineligible to get repaired or fixed. And if it's not done by their timeline, unfortunately, that carrier can drop that risk, and then we'd have to put it with one of our other carriers.
Yeah, and typically most usually that's only for homes that are very, very old. You know, the
Okay.
majority of homes, of newer homes that are being built, you know, even within the last 30 years, 40 years, aren't going to have that type of piping anyways.
Okay. Hey, we just got a question coming live. The question is, what else goes into insuring a rental property? Number one. And then number two is, are Airbnbs more difficult to insure? Two questions.
So for rental properties, in order to get a quote, it's essentially the same thing. I mean, we enter the same information to get the quote as you would a regular homeowner's policy. The only difference is I mean, there's a question being, you know, is it owner occupied or is it being rented out? And typically when it's not owner occupied and it's a rental dwelling policy, those are typically a little more to insure just because, I mean, the owner's not there. And sometimes a tenant may not have the same foresight or, you know, think they have the same upkeep responsibility as a regular homeowner might have.
Okay, good. What about Airbnbs?
So Airbnbs, typically they are a little bit trickier to insure. Some companies will not even take that risk. You know, there's a question on the application that states, you know, are you renting it out part-time for 6 months at a time or for, you know, a full year? And again, it all goes back to the risk that the company is assuming. So a lot of companies don't want to take that risk because there's multiple people that will be using that home for whatever reason. And it's simply just more risky. But we do have some carriers that will insure it. There is a slight, I would say probably a slight uptick in the rate because of that specific risk.
That makes sense. I mean, okay. So a couple more questions, guys. So if I'm buying a house and the seller needs to stay in the home post-closing and rent it back from me for a period of time, do I need an HOI policy and a renter's policy? What do I need to cover it? So I bought the house. I own the house, but the seller's like, hey, dude, I'm not letting you, I'll sell it to you, but I'm staying here for 2 more months because my house ain't done yet. We say, deal. Close on it. He's renting it back from me, the new buyer. How do we insure that?
So we get that quite a bit. So essentially what you need to do as the correct way to have it set up is that the buyer of that property would need to have a rental dwelling or a landlord policy for that time that he's renting that property back to the previous owner. Okay, because that's the correct way to insure it. It's not owner occupied, it's being essentially rented out. So it's like a landlord policy.
Okay.
Then the previous owner of that property who's now renting would need to have a renter's insurance policy. So the previous owner gets a renter's insurance policy. The new owner has a landlord or a rental dwelling policy. They're the same thing. And then once the owner then is occupying the home and the previous owner has moved out, then we would switch the rental dwelling policy or landlord policy to just a regular homeowner's policy. So
okay.
we've seen it before where if this scenario happens and then the new owner just has a regular homeowner's policy and there's a claim and, you know, the underwriters or the claim adjusters, you know, uncover that, well, it's not owner occupied, the previous owner is living there, they can deny that claim because it's not written correctly.
Okay, that's going to create a little bit of a problem from a lending perspective because this customer is saying that they're moving into the property. And even though we have a grace period of 60 days for our customer, there's this gap where we need to have the normal HOI policy, but during those 60 days, someone else is renting it. So can they have two? Can they have the landlord policy and our policy? Or I know it's a tough question and maybe this is a conversation for another day.
Yeah, it might be. I mean, I don't want to say something and kind of shoot myself in the foot. It's just one of those situations where it may, if it's something that you guys require, then maybe they would have to have two policies.
Okay.
I mean,
which leads me into my, go ahead, I'm sorry.
Sometimes too, you can, you know, depending on the length of time that they're going to be renting, you know, if it's for, hey, just for 3 weeks until we can, you know, we can get this other place all squared away so we can move in. Sometimes you can, you know, call the underwriter. That's our job, is to call the underwriter and say, hey, here's the situation. Is there a possibility for an exception? If they say no, well, then we have to do it the way Jim just described.
Okay.
If they say yes, well, then we make notes on the policy. The underwriter makes notes as well, and then it should be fine.
Okay.
And that's the thing that kind of goes back, I think, is just working with an independent that can work with numerous carriers, because different carriers have those specific guidelines. And like Brad said, yeah, if it's within a 30-day period or maybe a 60-month period, we make an exception from one of our carriers saying, well, we just write it as a regular home and then we're fine.
Okay.
So again, every carrier is going to be a little bit different with their guidelines.
Okay, let's dovetail into the next question, because somebody just asked this. Forget about the rent back. I closed on the house. I'm the buyer. I just bought Jim's house. All right. Jim's moved on. He's in his new house. He's happy. But you know what? Before I move in, I really like Jim's cool fuchsia painted walls, but I don't like it that much. So I want to paint them all white. So I got contractors going in there painting, and I want to get the flooring replaced. And I'm not going to move in for, 2 months. The house is empty. Seller's gone. I'm not there because I want to get all my stuff done and then move my stuff into the new house. Do I got to tell you that?
Yes, absolutely. So, again, it's going to be a timing issue. How long is that home essentially going to be vacant? So if you buy the home and you're like, hey, I got a list of things I want to get updated, and it's going to be at least a few weeks or under 30 days, then it's a regular homeowner's policy that you would get, and you don't need to change anything. But if you know that you're going to be doing quite a bit remodeling and it's going to be vacant, not homeowner occupied for 3 months, let's say, then we need to make sure that we're writing that policy correctly and that we're putting something on the policy saying that the home is vacant.
It's interesting, but I apologize, Jim.
Yep. No, some carriers, if they won't even accept that risk if they know that it's going to be vacant for more than 30 days.
Wow.
We have some specialty carriers that will do that. That's not an issue. We just have to obviously note that on the application. But yeah, if the home is not going to be owner occupied for, I would probably say more than 30 days, you 100% you want to, make sure that that's known and that the policy is written correctly. Heaven forbid something happens to that and it's not, good chance that carrier is going to deny coverage.
Yeah. Somebody just wrote a comment. I want to read this to you. Okay. It's one of our real estate agents said that they had a client that their agent told them not to worry about it. All right. And what ended up happening was they were getting the house remodeled and the plumber didn't tighten something right and they had a water leak and it was almost like $75,000 worth of damage, and the insurance company denied the claim.
Yep. So
That's exactly why.
Yeah. If they know that home is unoccupied or vacant essentially, and something happens, they're good chance that the claim's going to be denied.
And again, because it's all about mitigating risk. So, if someone is at that house living and that same thing happens, they're going to be able to call, a ServPro or whoever to kind of come out and get that fixed and stop that leak right away. Whereas if they don't, that water could be running for days and weeks and months.
Right.
And then, a $2,000 worth of damage becomes $400,000 worth of damage.
Oof. Okay.
And of course, an insurance company would rather not pay that larger amount.
Yeah. All right. 2 more questions and we'll wrap this up. So you don't have, and please tell me if this is pushing it, but I'm just going to read this. Okay. So is it like attorney-client privilege with my insurance agent? Can I just be as raw and transparent with you, and then you can tell me without it affecting my policy, my premiums, just say, hey, listen, this is what I'm really doing, and then you counsel me and advise me on how it needs to be done legally, properly, and ethically? Or am I supposed to just kind of Google this and figure it out and then try to spin it to you guys somehow? Or do we have like an attorney-client privilege?
You always just want to be upfront and shoot it straight. It is like, I guess you could,
it's better to err on, especially with insurance. The whole purpose of insurance is you're transferring risk from yourself to a company that's a little, more financially sound. So yeah, you absolutely want to make sure that you are always upfront and honest with your agent. And then then it's your agent's job, then it's our job to determine what the best course of action is.
Yeah.
You just never want to get into well, I thought that it was this way, even though I didn't check with you first. Because a lot of times too, a customer will tell us kind of a one-off situation, and all we do is call our underwriter and say, hey, here's the situation, what's the proper way to do it? And they'll look at it and say, you know what, go ahead with it, or no, you need to add an endorsement here or coverage here for the time being. And then they'll note the policy. And again, you just want to make sure that there is some recourse for your client if something were to happen. You never want to get in that situation where you just kind of guess and then kind of wait and hope.
Okay, that makes perfect sense. That's solid counsel. All right, last question. Umbrella policies. Is something I should have? Is it good? It seems like it's kind of cheap, but is it worth it? I mean, just tell us what it is and why I need to have it.
Yeah, that's a really good question. So we always recommend umbrella policies for our clients regardless. And then we obviously explain what it is. So what an umbrella policy does is it covers your additional liability over and above your auto liability limits and your home liability limits. If you have, it all comes back to risk. If you have young drivers on your auto policy, typically young drivers get into more frequent and more costly accidents with bodily injury claims. You absolutely want to have an umbrella policy. If you have a pool or a trampoline, the propensity for someone to get hurt using one of those things is a lot greater. So yeah, you definitely want to have an umbrella policy. If you have a dangerous or vicious dog breed that the company accepts, but you're like, hey, you know what? I'm still a little bit nervous that if this dog bites the Amazon delivery person by accident, we want to make sure that we don't get sued. If something were to happen, let's say a kid jumps off a diving board at your house into your pool and hits their head and has to go to the hospital and they try and sue you. They're going to look at, that attorney is going to take that information. They're going to look at all of your assets. So how much is your home worth? How much retirement do you have? What's your 401k, your IRA? All of that stuff kind of goes into your assets. And that's what you're trying to protect. So you don't ever want to get sued. You want to have that extra liability. Now, in some cases, an umbrella policy honestly doesn't make sense. The 23-year-old kid who just graduated college, lives out kind of in the sticks and rents an apartment, probably doesn't have a lot of assets. That's someone that probably doesn't need an umbrella policy. But again, if you have any type of extra risk than what might be considered normal, you absolutely want to have it. And you're right, it is, for the amount of additional liability coverage, it is rather inexpensive. Now, if you have a prior liability claim, or if you've been involved in a lot of at-fault accidents, that's obviously going to affect the rate of that umbrella a little bit more than if you didn't.
Okay. I know I said we were done, but can you guys give me 5 more minutes? I got 2 more questions for you.
Yeah, absolutely.
Right. So the first question that I have is, you brought up dogs. Like, I didn't have a dog when you guys bound me. I get my renewal, I pay my renewal. All of a sudden, my daughter's like, Daddy, I really want this dog. And I buy this dog. I got to tell you guys, I bought a dog.
I mean, you really, you don't. So it's about the time when the application, when the policy was written. Okay. So if you in last year bought a home policy and you didn't have a dog at the time, okay. Now this year, like you said, your daughter wants a dog, you buy a dog. You don't have to call your agent and say, hey, we just got a dog, because you didn't have it initially at the time of the application. Heaven forbid that dog were to bite somebody, the liability on your home insurance would still cover you and it wouldn't be denied. It's only at the time of the application when it was written, if you lied about it and they found out you had a dog when you told us you didn't, then there could be a claim issue. But if it's after the fact, it's not your responsibility to call your agent and say, hey, well, we got a dog now.
On renewal, is it my responsibility to say, oh, by the way, I found a really nice pit bull? You need to know that.
Yeah, typically every year when a policy renews, we do a quick review. We encourage the client to give us a call when they get their renewal information. Hey, that should be your signal. Give us a call. Let's talk about if there are any changes. And usually that kind of, that will trigger something. Hey, we just my wife was pregnant, we had a baby, or yeah, we just put a pool in. Yeah, I guess we should probably get that covered. So yeah, typically every year at the annual review, we can get a lot of that stuff out of the way.
All right, I promised. This last question. So my daughter gets her driver's license now, okay? Obviously, we want to get her insured. We got her car, and she gets in a car accident, obviously, so that affects me as the dad. And how long does her accident do I got to pay for it? Does it stay with me forever because it was my policy? Or when she gets married one day, like in September, let's say, and she gets her own policy, am I relieved of that extra premium that I've been paying for the last 8 years?
Yeah, so that's a really common thing. People with young drivers on their policy, obviously the rates get a little bit crazy. And that's just obviously, again, back to the risk that the company is assuming. Typically, at-fault accidents will stay and they will follow the named insured on the policy. So if you own the policy, that's going to follow you for usually 5 years. Now, some companies are going even further back, and they're doing 7 years for tickets, accidents. And again, it's very tiered. So at-fault accidents, depending on the amount that gets paid out, is surcharged a certain way. Not at-fault accidents, those even get slightly surcharged, even though you had nothing to do with it, and it wasn't your fault. And then if the daughter moves off the policy, then that comes off, her specific record comes off of your insurance history, and the rate gets readjusted. But yeah, that's usually how it is.
Does that affect homeowners insurance rates as well? Driving records?
No.
Just auto rates?
Not that I've ever seen.
I've never seen that with any of our carriers.
Now, sometimes I will say this, just to throw something else in there. If you have very low auto liability limits and you get home insurance, a lot of companies will not give you as big of a discount on your home insurance if you have very low auto liability limits. And part of the reason for that is they look at that as maybe not as financially responsible as someone with really high liability limits.
Okay. So I don't have a lizard.
When you bundle the two together, you have auto and home insurance, the company's going to give you a multi-line discount.
You read my mind, Jim. I don't have a lizard to ask the question, so I'm going to ask you myself, even though I got a great.
We don't like the lizard.
Yeah,
Get that lizard over here.
We killed the lizard before the show, so we're safe. That's why he's not here. But my question is, why bundle? Like, I'm like, hey, I got my here, there. Just speak to that so when our real estate agents are talking to their clients, this is to help them bring value to their clients when they're out in the field. And they're saying, hey, if you do this, this is why. What's the reason why they should bundle?
Just like, so it's every carrier, or most carriers, I should say. I mean, I don't know every company, but they give a multiple line discount. So when you bundle your auto and your home insurance, you're it's on average about 20%. You're saving about 20% on your home, and then you'll also save money on your auto insurance by having homeowners insurance.
Okay.
So you're going to get a discounts on both of the policies, and I mean, it just makes sense to do that. Because having one policy with one carrier, one policy with another carrier.
Now, in some instances, for certain risks, it does actually make sense. So some companies, one company might have really high auto rates, but really low homeowner rates. And then, another company, vice versa. So again, the importance of having an independent agent, someone that can shop you around, you can find what really is the best rate, whether it's bundled or not. But like Jim said, I would say 90% of the time, bundling your home and auto with one company is going to get you the best rate.
And I'll just throw this in there too. Some of our carriers, Hanover being one of them, is that if you have a monoline policy, so if you just buy homeowners insurance, it doesn't qualify for their platinum homeowners policy. So it's kind of like a substandard policy that they can get for their home, versus if they have auto and home bundled, then their home policy can qualify for their platinum policy, which essentially has better coverage on the home. It covers more things.
That's excellent. Excellent. You guys have been a wealth of knowledge. You are both consummate professionals. I thank you for your time. I've got Jim Bremberger and Brad Zacharias here. How do we get a hold of you? If a real estate is like, listen, I want to talk to that guy, how do they get a hold of you?
Well, I could shoot over my email to you, or you can call our office, which is at 262-214-0999.
I give, yeah,
I'm on cell
in
phone.
addition to the email and our office line, I give all of my clients and all of my contacts, my cell phone number, because just like with anything, you know, stuff with insurance doesn't just happen between the hours of 9 and 5.
Right.
Sometimes people are looking through things at 7:30 at night and they have a quick question. You know, sometimes it's easier to just send a quick text message, which is completely fine. Also, if you get into a claim situation and you've never been in a claim situation, you've never been in a car accident and it's 10:30 on a Friday night, absolutely, you know, we want to make sure that first and foremost, we're there for our clients. So yeah, we give our cell phone to all of our clients and encourage them to use it when they need it.
Well, one thing a real estate agent will appreciate is somebody who answers the phone, because
Yeah.
they work 24/7. And our real estate agents that are on this call today, they work very hard and they're always available. So you can call these guys at 262-214-0999. Ask to talk to Brad or Jim, and these guys know what they're doing. So super good. Appreciate it. Want to say thank you for coming on Ask ProVisor. Appreciate your business and your knowledge, and just make it a great day today. And I hope this has
Thanks
been
for
very
having me.
beneficial
Yeah.
and very helpful for everybody. I really appreciate it. Thank you.
Absolutely.
All right, take care.
Thank
All
you.
right, guys. Bye-bye.
Yep, bye-bye.